Okay, so part 2 is finally here. I know a lot of you have been waiting for part 2. And if you have not watched part 1, please pause this video, go watch part 1, and I'll see you guys back in a couple of minutes. So, what are the best semiconductor stocks to invest in 2021 and in the near future? So in part 1, we said that the semiconductor industry today has been consolidated such that there are one or two dominant players in each of the segments. And we identified, if you remember 6 major segments. You've got companies that do pure fabrication, where they manufacture the semiconductor chips. We've got companies that focus on computer processing, mobile processing, GPUs, memory chips, and companies that make equipment for the fabrication facility. So 6 main segments. As an investor, I only want to buy a company when it is able to dominate an industry or dominate a segment in an industry with high profit margins with a sustainable competitive advantage. I don't want to invest in a company when it's in a price war with many other competitors. So in part 1 of the video, we looked at the first segment, which is the foundry segment, which is what is known as the fabrication facilities, companies that actually manufacture the silicon chip. And there's only one major player that has a 90% market share in the advanced chip technology, and that is TSM, Taiwan Semiconductor Manufacturing Company. So I mentioned that I initially bought a stake in TSM. And again, far behind TSM would be Samsung, and even further behind would be Intel in terms of the fabrication facility. All right. And in part 1 of the video, we also looked at the second segment, which is companies that focus on making processors for desktops and laptops. And we say there are 2 main players that are battling it out, which is AMD versus Intel. And for many, many years, Intel has been the established market leader in computer processors. But recently, they have lost market share to AMD, and AMD for the first time has actually exceeded market share over Intel. Again, this is only for computer processors, right? And the reason is because AMD has processors that are way more advanced than Intel, because AMD outsources their manufacturing to TSM that is able to make the 7 nanometer transistors and lower, whereas Intel is stuck at the 10 nanometer. Will Intel catch up? We don't know, but for now, AMD is leading in this particular segment. Okay, so in part 2 of the video now, we're going to look at the third segment, which is mobile processors. Which companies dominate in making these semiconductor chips for our mobile phones and our tablets? Well, so again, these are mobile processors, CPUs used in phones and tablets, and basically for this segment, there's no one big player. There are no 2 big players. It's a bit of an orgy, right? And it's being fought out by Apple, Qualcomm, MediaTek, and Samsung. And here's the thing, out of these 4 companies, 3 of them, Apple, Qualcomm, and MediaTek, only design the chips. They don't manufacture the chips. They outsource it to, you guessed it, they outsource it to TSM, Taiwan Semiconductor Manufacturing Company, right? And the only company that doesn't outsource, makes their own chips, is Samsung. Now, for this particular segment, all the designs are based on the same open source ARM architecture. So because of that, you find that the mobile processing chips from Apple versus MediaTek versus Samsung are more or less the same. There's not much of a fundamental difference in chip performance between the players. So, in other words, it's kind of like a commoditized product in this segment. So, no winners here. No winners here, okay? Let's move on to the next segment, which is GPUs, dedicated GPUs, or graphical processing units, or graphics cards. So these are essentially companies that make graphic cards that are used for gaming, for graphic design, 3D manipulation, as well as machine learning. So in this segment, there is one or two dominant players. And the dominant player right now, the leader, would be Nvidia. Ticker symbol NVDA. And close behind would be AMD again, right? So again, AMD is a leader in desktop processing, and it's a close fighter or close competitor in GPUs. So again, Nvidia is the established market leader with 80% market share of the dedicated GPU market, and it specializes in top-end GPUs. It dominates, in fact. It's the only guy that makes top-end GPUs. AMD is catching up. Recently, AMD is posing a threat to the mid-range GPU market, and they are close behind AMD with their new big Navy line of GPUs that power the PS5, PlayStation 5, and the Xbox. So again, if you take a look at this chart, you can see that again, Nvidia has been the market share leader, and AMD has been the close competitor. And forecast, Nvidia is still looking to maintain its distance from AMD. So the winner of this segment, ding 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 ding, is Nvidia. But let's take a closer look at the financials, the intrinsic value, and the charts. Now, Nvidia looks like a pretty good company. If you take a look at its historical revenue, it's been growing very consistently for more than 10 years. Its net profit, the one in green, has also been growing consistently, and financially it's very strong. It's got a lot of cash, and it's got less debt than cash. So it is net cash positive. If you look at the operating cash flow, it's also been increasing consistently, and free cash flow also increasing consistently. So the fundamentals look pretty solid. It is a great company. By the way, Nvidia only designs its GPUs. It doesn't manufacture them. They are all outsourced to, there you go, TSM, Taiwan Semiconductor Manufacturing Company, right? So no matter who wins the battle, TSM always wins, and that's why I've invested in TSM. Now, for Nvidia, it is a great company, and I would say it has probably a narrow economic moat. Not a wide moat like TSM, because again, TSM has no close competitor, but Nvidia does have a close competitor in AMD. So I'll say it's a narrow moat company, but a good company nonetheless. And I always say that. But then again, a great company can be a bad investment if you pay too high a price for the shares. But a great company is a great investment if you pay a price lower than what the shares are worth. So it's always worth to do an intrinsic value calculation. So I've done a quick calculation using my intrinsic value calculator. And again, this is a calculator that you get from the value momentum investing course, where you're going to learn how to put in all the numbers and value any company. Because once you know the intrinsic value of a company, it's very easy to know, is it expensive or cheap right now? So whether something's expensive or cheap is not just a PE ratio, because that is very misleading. You must actually do a discounted cash flow analysis. So for Nvidia, you can see that currently it's generating $6 billion in cash flow. We project that over the future at a 23% growth rate, and we assume that the growth rate will then slow down over time. It's got $6 billion in debt, but $12 billion in cash. This gives us an intrinsic value of $500 per share. So that's the intrinsic value. So as of yesterday's closing price, the shares are trading at $619. Is that correct? Let me just double check. Is it 619? Yes, 619.52. So that means right now the shares are... Oops, my bad. I forgot to do this. This should be... It's in US dollars. Boom! All right. Okay, good. So currently the share price is at 619. So it is selling at a premium. Right? It is now selling 23% above the intrinsic value. So, great company, but too expensive to invest in. All right? So, if you look at the charts, boom, there we go. So, you can see that I've drawn the intrinsic value in green, right? $500. And you can see right now it's at 619. So, it's 23% overvalued. So, I say no matter how great a stock is, how attractive a girl is, or a guy, never chase the girl. All right? because she may turn around and slap you in the face. Never chase the girl. Let the girl run to you, run to your arms when she's fearful. In other words, only buy a great company when there's short-term panic, when there's short-term retracement, then you buy. So I'll be putting this on my watch list. I may buy if it gets cheap enough, if the share price goes below the intrinsic value by 10 to 20%. And again, remember that a great company, the share price doesn't go up in a straight line. Doesn't go up every day, every week, every month. It moves in wave patterns, right? So again, wave up, wave down, wave up, wave down. Never buy on the wave up. Never chase the girl. Always wait for a wave down and buy on a wave down. Because as an investor, you always want to buy as low as possible. Okay? Let the girl run into your arms, buy on a wave down, and then when it waves up, that's how you get a great return. So if you look at the chart pattern, now, when I look at stocks, I like to look at different time frames. If you take a look at the long-term chart of Nvidia, there you can see, right? You can see this big wave up, wave down. Now it's waving up. Okay, so I want to catch it on a wave down. Now, when will it wave down? No one can predict when it's going to correct, but it will correct eventually. That's when I want to be a buyer. Okay, when it waves down. Again, if you take a closer look, let's look at the weekly candles, shorter time frame. There we go. So you can see that wave up, wave down, wave up, wave down. Notice every time it waves down, it finds support at the 50 moving average. Okay, so that could have been a point to add some shares when it went down below the intrinsic value for a while, but now it has waved up. Okay, so don't chase it, wait for it to wave down again. When, I don't know when, all right, be patient. When it waves down, we could be a buyer of Nvidia when that happens, right? But if you already bought the shares, you're in the stock, great, hold it, right? Because I think that for now, it still has some room to run on the wave up. In terms of share price performance, you can see that Nvidia and AMD have been pretty neck to neck in the last 5 years. In fact, in the first 5 years, Nvidia was outperforming AMD. But, well, rather, in the first 2.5 years, okay? In the last 2.5 years, you can see that AMD has outperformed Nvidia. So they're pretty close, okay? So it doesn't mean that AMD will continue to outperform Nvidia, because sometimes they can take turns, right? You go first, I go next, I go first, you go next, right? So they're pretty close between the two. But between the two, I prefer Nvidia, especially when it comes to this particular segment. All right, the next segment would be memory chips. So the memory chip market can be divided into two parts, DRAM and NAND flash, okay? So for DRAM, this would be the short-term memory chips used for phones, computers, and servers, the RAM that we've learned since we were kids, right? And the NAND flash would be the solid-state storage for long-term storage. You know, the hard disk, right? So that's the other chip, okay? Now, the thing about this segment would be the memory chips are all pretty much the same. They are very commoditized, and so you can easily replace one chip with another brand. So they are very interchangeable, they're very commoditized, and very cyclical in nature. So because of that, you know, again, this is a segment where it's a battle royale. There are many competitors fighting with each other. No one has a particular advantage over the other guy. But the big players would be Samsung, Micron, and SK Hynix. But no company in this segment that I think that it's worth investing in because of that. Okay, finally, the last segment would be manufacturing equipment suppliers. So this is very interesting. So remember that we have got companies that manufacture these semiconductor chips, right? Like TSM, Intel, and Samsung. Now, to manufacture the chips, they need equipment. They need very specialized equipment. So these are the companies that make the equipment for TSM, Intel, Samsung, SMIC, and the other foundries. Okay, so again, these are companies that design and manufacture the specialized tools required to make semiconductors. The interesting thing about this segment would be that there's no one company that can make every part of the machines, because they are so specialized, they're so complicated, and they're so expensive. So the interesting thing is for each part of the manufacturing process, you've got one or two companies that specialize in making that part. All right. So in other words, they dominate that part of the supply chain or that manufacturing chain, if you will. All right. So the first company, I would say, that has a wide economic moat that does dominate its segment would be ASML. Ticker symbol ASML. So this company is the market leader in photolithography machines. Is that how you pronounce it? Photolithography machines. Okay. So these are the special machines required to imprint. They use some light rays to imprint the transistors design onto the wafer. Okay. So basically, only one company can make this machine. Or rather, only this one company makes 88.5% of this machine. That's ASML. So they dominate the cutting edge machines that use extreme UV light. It's called the extreme UV lithography tools. So again, who are their main customers? TSM, Samsung, and Intel. So again, what I love about ASML is that it's a monopoly. I only like to invest in monopolies that have no competition. Then they dominate that industry. They can charge whatever price they want, and their sales and profit margins are fantastic. So again, if you look at ASML, you can see the same thing, right? Historically, in the last 10 years, their sales revenue have been increasing very consistently, profits increasing very consistently, all right? They have got huge amounts of cash, a lot more cash than debt, okay? And again, cash flow from operations increasing, free cash flow increasing. So fundamentals, again, are solid in this company. But again, just like Nvidia, it is expensive right now. It is a bit overpriced. So if you look at the charts of ASML, you can see the intrinsic value is about $600 after I've done my valuation. And again, you can see right now the wave patterns. Remember? Share prices move in waves like breathing patterns. Breathe out, breathe in. Breathe out, breathe in. Wax on, wax off. Okay? And it's kind of like a human being. No matter how strong you are, you can't breathe out forever. You will run out of air. Eventually, you have to breathe in before breathing out. And stock prices have shallow breaths and deep breaths, right? So shallow breath, shallow breath, shallow breath, deep breath, shallow breath, shallow breath, deep breath. We want to wait for a shallow breath to add some shares, a deep breath to buy a lot of shares. That's how we get a really good price. So if you take a look at ASML, you can see historically the pattern, right? So breathe out, shallow breath, shallow breath, shallow breath, breathing out, shallow breath, okay? So notice every time it has a shallow breath, it breathes in with a small retracement, it finds support at the 20 moving average, the red dotted line. Can you see the red dotted line? So the moment it hits the red dotted line over here, you could add some shares because it is at a support level and it is at least near the intrinsic value. But you can see right now it has breathed out. It's now breathing out. So now that it's breathed out, again, don't chase the girl because now it's no longer cheap. It's a bit overpriced right now. Sure, you could trade it as a short-term trade, but for investment, you want to wait for a better deal, right? And once in a while, when you get a bear market like, ooh, breathe in, deep breath, okay, it could correct all the way down to this yellow line. So if it goes down to that yellow line, my God, I'm going to pawn my wife's jewelry. I'm going to sell my mother-in-law. I'm going to sell my dog. I take all the money. I'm going to buy ASML. Okay, but it's going to take a while for that to happen. Anyway, okay, so that's ASML. All right, so ASML is a monopoly in, again, photolithography machines. They are on their own. Now, then you've got two other suppliers. You have got Lam Research and you have got Applied Materials, ticker symbol AMAT. Now, between these two companies, they are both good companies as well, but they are basically like competing in a lot of the other parts of the manufacturing process. So, for example, they both compete in what is known as deposition equipment. Deposition equipment applies the thin film layers to the wafer safe surface, right? So they both do that. In fact, Applied Materials is pretty diversified. They make a lot of the different tools in the manufacturing process except photolithography. So this is the only thing that Applied Materials doesn't do, but they do everything else. So these two are basically fighting it out in a lot of the other parts of the process, like again, deposition and dry etch. What the hell is dry etch? Dry etch is a process where they remove materials from the wafer, right? You know, those whatever dust particles, they remove that, right? So they create equipment to do all that stuff. Now, what do I feel about these two companies? I would say they are okay companies, they are good companies, but they are not monopolies. They are not monopolies. They are kind of like a duopoly, and they are both slightly overvalued as well. So if you look at the financials of Applied Materials, AMAT, like I said, it's a pretty good company. It's not a bad company, it's a good company, but it's not a monopoly like ASML. And because it's not a monopoly, you can see that the sales revenue and the profits are sometimes a bit choppy. So for example, you can see the revenue going up, revenue dropping, going up, dropping. So it's a bit more choppy, and the profits are also not as consistent, right? You can see profits going up and then lost money or broke even, profits went up and profits went down and went up. So it's a bit more choppy. And in terms of the financial strength on the balance sheet, you can see that it's not bad. It's got about the same amount of debt as compared to the cash. So it is not high debt, low cash. It's pretty okay, right? But versus ASML, where there's so much cash and no debt, you know, between the two, I rather invest in ASML compared to AMAT, as you can see why. Finally, the last big player in the equipment supplier segment would be KLA Corporation, ticker symbol KLAC. So this company is a market leader, 58% market leader in the specific process diagnostic and control segment of the semiconductor equipment industry, known as PD. And again, this is not a bad company, but again, between all of them, what I don't like about KLAC is that it's got a lot more debt than cash. So again, in investing, you always want to compare these companies and say, hey, you know what, I want to pick the best one out of the bunch. If you ask me, my preference is in ASML, but at the right price. So to summarize, oh, by the way, if you take a look at the last 5 years, you can see how they have compared in terms of the price performance, right? In the last 5 years, you can see that's Lam Research, that's ASML, that's AMAT, and finally that's KLAC. So more or less, they are correlated. They pretty much move together. So as an investor, there's no point investing in all of them at the same time because they move together, right? It's correlated. So pick the best one or the best two, and you could go for that, right? Finally, well, let's summarize, and we say that, okay, for fabrication, we've got TSM as the leader. For computer processors, we said the leader is AMD. For mobile processors, is a gangbang, it's an orgy, so there's no winner. GPUs, it'll be Nvidia. Memory chips, again, gangbang orgy, no one's a winner. Finally, manufacturing equipment suppliers, they all dominate in their own way, but preference goes to ASML. Now, ultimately, if you say, Adam, I don't know which one to choose, they all look good. Which one do I choose? So if you don't want to choose a specific company, what could you do? Buy the ETF, the exchange traded fund. So basically, when you buy the ETF, you're buying all the companies at the same time. So there's no one company's specific risk. So there are quite a number of ETFs around, and the most popular one would be the SOXX ETF. That's the ticker symbol for the iShares Semiconductor ETF. So this is the semiconductor ETF I talked about. And again, when it comes to an ETF, there is no one intrinsic value because it's made of many, many companies. So how do I decide when to buy shares in the ETF? I base it purely on the technical chart patterns. And again, I look to buy during a wave down to a support level. And again, you can see historically in the last 5 years, it moves in wave patterns, right? So you can see wave up, wave down, wave up, wave down, wave up, wave down, wave up, wave down, wave up, you can see these wave patterns, right? These are the wave patterns, okay? And notice that every time there's a shallow wave, it will find support somewhere at the red dotted line, the 20 EMA. And during a bear market, a big correction, it would drop down as far as the green line. All right. So right now you can see that the price is somewhere up here. Okay. So again, even though I know it's going to go up in the long run, but I want to get in at a better price. Okay. So you can see, wave up, wave down, wave up, wave down. So recently it did a bit of a wave down. Now it's waving up right now. It's waving up right now. Okay. So this would have been a good time to add some shares. But right now it's like waving up. Okay. So I would probably like to add more only if it waves back down to this red dotted line, which is the 20 EMA, but only take a bigger position when it waves down to this, about 358, which is nearer the 50 moving average. And again, we can never predict when the big retracement will come, but it will always come eventually. So in investing, it's about being patient, keeping the stocks and ETFs on your watch list, and entering when you've got a great deal, and that's how you get the best returns over time. If you enjoyed this, subscribe for more videos, and of course, if you like what I'm sharing on YouTube, that's great. But whatever I'm sharing with you on YouTube, it's less than 5% of what I teach my students in my courses and in my private UIP community, which is the Ultimate Investors Playbook. If you want to join our community, right, visit our website at piranhaprofits.com or send us an email at enroll, ENROLL, at piranhaprofits.com. Find out more how you can join our community and really plug in and learn the 95% of the stuff that my students get constantly in our community. Stay safe. May the markets be with you. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.